I would like to introduce the first panel. The first panel will look at issues of sustainability, but we will focus, as Paulina said, on the second pillar of her presentation in the area of sustainability, which is the taxonomy. And I'm absolutely delighted to have with me today Maria Raffaella Assetta, who is the Head of Unit for International Affairs in the European Commission, Khairul Ridzwan Abdul Kuddus, who is the General Manager of the International Office of the Chairman of the Malaysian Markets Regulator, Julia Haake, who is the Managing Director of Market Strategy and Outreach at Moody's ESG Solutions, and finally, but certainly not least, Jaclyn, Global Head of Sustainable Finance Strategy Initiatives at Standard Chartered Bank. I think we will have a very, very interesting panel discussion. Maybe just to introduce very briefly some of the things that we would like to kind of talk about to give you a sense is kind of how the EU and Asian work on taxonomies fit together, so where there might or might not be fragmentation. Things like the scope of the taxonomy. Europe is going further to some extent than other jurisdictions and going beyond climate change related issues. The question of flexibility or adaptability to economic specificities in different jurisdictions and different markets. The usability, so how can financial institutions or other market participants actually benefit from that taxonomy? Issues of transition, which were raised by Paulina as well. How do we keep taxonomies up to date as new technological developments or scientific information becomes available? And finally, but certainly not least, given the nature of this discussion, how do we ensure more international cooperation, and what role can international standard setting bodies or initiatives like the G20 play in that process? So I think it'll be very interesting hour and 15 minutes. Thank you very much to our panelists. And maybe I start, Maria Raffaella, with you to just elaborate a little bit on the points made by Paulina around the importance of the international platform, but also the EU's work around the G20.
Thank you very much, Nickolas. Good morning, good afternoon, good evening, everybody. Very happy to be part of this panel, which touches upon one of the key themes for the future of finance, sustainable finance. As Paulina mentioned, the transition to a sustainable economy is even more important now in the current geopolitical situations with the invasion of Ukraine by Russia. So the case for a rapid clean energy transition is stronger and clearer than ever. Now, we in this first intervention, I will touch upon two main points. First, I elaborate a bit on what is the EU taxonomy and what is its role in the EU sustainable finance framework. And then I will talk about the international cooperation in that respect, namely in the IPSF, the International Platform on Sustainable Finance, and in the G20. Now, the EU taxonomy. As Paulina has recalled, the EU framework builds on three pillars: disclosures, taxonomy, and green tools. The taxonomy is the centerpiece of our holistic approach to green sustainable finance. What it is a classification of activities, science-based, which translates climate and environmental objectives into clear criteria. The objective is to create a common grammar for sustainability activities, which allows companies to share a common definition of what is sustainable when determining their investment choices. The taxonomy does this by defining and classifying what is in line with a zero net trajectory by 2050. What is not the taxonomy is not a mandatory list of activities in which investors have to invest, is not an energy policy tool, is a transparency tool. And which can provide companies with performance criteria at the level of activity, allowing them to increase their share of green activities and to seek financing for this increase. Now, more concretely, on the scope of the taxonomy. The taxonomy regulation, which entered into force in July 2020, includes not only climate, but other environmental objectives. It includes 6 environmental objectives. So in addition to climate change mitigation and adaptation, it also includes the sustainable use and protection of water and maritime resources, the transition to a circular economy, pollution prevention and control, and protection and restoration of biodiversity and ecosystem. How does it work? Basically, it sets out the condition under which an economic activity that can be considered as contributing substantially to one or more of those environmental objectives. When this condition is met and the activity does not harm significantly other environmental objectives, can be qualified as environmentally sustainable. There are also other conditions, minimum safeguards that needs to be respected in minimum social safeguards that need to be respected for an activity to have this qualification, and a number of criteria, screening criteria that has to be verified to concretely establish that an activity is environmentally sustainable. These criteria are specified in Commission Delegated Act. We have first Climate Taxonomy Delegated Act that covers the activities making a contribution to the objective of climate change, adaptation and mitigation. This Delegated Act is applicable from January 2021 and is complemented by a disclosure Delegated Act, which specifies the information that have to be disclosed under the Non-Financial Reporting Directive as regards the extent to which the activities of are taxonomy aligned. We also recently presented a Delegated Act complementing the Climate Taxonomy Delegated Act, which recognizes the role under specific and strict conditions that certain nuclear and gas activities can play into the transition to a low carbon and greener energy mix. Now, looking forward, then the Commission will also work on covering other environmental objectives. We believe that by providing clarity to the markets about which activities offer solution to the sustainability crisis that we face, the EU taxonomy is an essential tool that to increase the potential that green financing offers to support the transition. And we see that many other jurisdictions are in the phase of developing their taxonomy, including many Asia-Pacific members of the International Platform on Sustainable Finance, which leads me to the second point, international cooperation. The EU is fully committed to working with its partners on bringing consistency in the approaches to sustainable finance. And to this end, we have the privilege to cooperate very closely with many Asia-Pacific countries in the IPSF, as well as in the G20 Sustainable Finance Working Group. As to the IPSF, since July 2020, it has been working on taxonomy with the aims to undertake a comprehensive assessment of the existing taxonomy. The work known as Common Ground Taxonomy is meant to provide clarity and transparency about the commonalities and the differences between different approaches, and eventually contribute to lowering the transboundary cost of green investment and scaling up the mobilization of green capital internationally. The first step was the Common Ground Taxonomy report published last year, which starts analyzing comparability and interoperability of taxonomies across jurisdiction, particularly the EU and the Chinese taxonomy, in line with the roadmap of the G20 Sustainable Finance Working Group. This first exercise was limited to only some features of the EU and Chinese taxonomies, namely the activities that makes a contribution to climate change mitigation objective. And the intention now is to bring this important work forward, possibly by extending the comparison to other environmental objectives, if feasible, include also the do not harm, significant harm principle and minimum safeguards criteria, and extending the scope of the Common Ground Taxonomy exercise also to other IPSF partners. In addition, as Paulina recalled, the IPSF will work on transition. Transition now at the international level, transition finance is one of the topics that is recognized as deserving a lot of attention. And we have seen great interest from IPSF members to work on it. So in 2002, the IPSF has created a new working group which will explore how sustainable finance alignment approaches, such taxonomies, labels, and portfolio metric alignment metrics, as well as corporate strategies and disclosures, may integrate transition considerations. A number of other forums are looking into this topic, hotly debated, and we believe that IPSF can bring added value to this debate, and we really appreciate the expertise that our Asia Pacific members bring to the work of the platform, which the platform has been contributing also to the work of the G20 Sustainable Finance Working Group. And in that area, this year is for us of utmost importance to implement the roadmap agreed last year. We should ensure also that this roadmap is then supported by the future presidencies, and then the good start is essential. This year, the G20 Sustainable Finance Working Group will focus on three areas: transition finance, as I mentioned, accessibility and affordability of sustainable finance instruments. That's an element of inclusion that Paulina mentioned already, and policy levers that could influence the climate transition and sustainable finance. The EU supports all these work streams, and particularly the development of a framework for transition finance, the development of high-level principles on which all jurisdictions can build, as well as the work that the G20 Sustainable Finance Working Group plans to carry out with on international initiative and private sector pledges to improve the credibility of financial institution commitments. We think that financial institution could already use the EU taxonomy and other sustainable finance tools we have in the EU framework to progress towards achieving their transition plans at entity and at portfolio level. And we believe that in this area, the international cooperation is really essential. International cooperation is essential in all areas for regulatory convergence, but in sustainable finance, given the global dimension of the challenge and the integration of the market, this cooperation is not only welcome, it is essential. And I will conclude here. This is my first intervention. Thank you.
Thank you very much, Raffaella, for this overview. There's already 1 or 2 questions coming in, and I will bundle them and take them a bit later. But it shows that your kind of comments have already triggered reactions by the audience, and it reminds me to remind the audience that you should please submit many questions. I will bring them in a bit later. But maybe in the meantime, Khairul, there's already been a discussion about, initiatives in Asia, different taxonomies between different jurisdictions. But actually, one of the things I find very interesting is that ASEAN has been trying to work together on a common taxonomy, recognizing diversity in unity, so to speak, some specificities around individual markets. And I know you're publicly consulting on this taxonomy at the moment. So it would be very interesting to hear a little bit how you've approached this and how you've looked at the uniqueness of ASEAN, which of course is not yet institutionally as integrated, maybe never will be as institutionally integrated as the European Union.
Thank you, Nickolas. Good morning, good afternoon, good evening, everyone. It's indeed a pleasure to be here. It's an honor to be here actually with this esteemed panel of speakers, Raffaella, Julia, and Jaclyn. First and foremost, I'd like to thank FISMA for the invitation to speak on the ASEAN taxonomy at this event. I'm happy to share perspectives on the ASEAN taxonomy. I'm from the Securities Commission Malaysia, and the SC Malaysia is one of the members of the ASEAN Taxonomy Board who's developing the ASEAN Taxonomy. We're also the chair of the Working Group on Market Facing and Resourcing at the ATB, or ASEAN Taxonomy Board. So perhaps I think Nickolas and fellow panelists, maybe I could just give a bit of background on how the taxonomy started. It actually, is one of the components of ASEAN Sustainable Finance initiatives, and this, of course, is a result of the awareness on issues relating to sustainability and climate change. What has been going on globally has not escaped the ASEAN region. I think before a few years ago, the ASEAN regulators had come up with a few sustainable finance initiatives. The first notable one for the capital markets was the ASEAN Green Bond Standards, followed by the Social and Sustainability Bond Standards, which were based on ICMA's, ICMA's Green Bond Principles, Social Bond Principles, Sustainability Bond Principles. But in 2020, I think the regulators felt that there was a need to have a better plan or roadmap to chart out the sustainability or sustainable finance agenda in the region. So in that year, there were 3 roadmaps or reports that were published by a few sectoral bodies in ASEAN. One is the roadmap for ASEAN sustainable capital markets. Another one is the report on promoting sustainable finance in ASEAN. So these were issued by the ACMF, or the ASEAN Capital Markets Forum, and the Working Committee on Capital Market Development, and this is specific to the capital markets. But in addition to that, the banking regulators came up with the report on the roles of ASEAN central banks in managing climate and environment-related risks. So what was notable that within those three reports, the recommendation for a common taxonomy was one of the recommendations in each of them. And because of that, the ASEAN regulators came together. The three sectoral bodies that I mentioned just now, including the ASEAN Insurance Regulators meeting representing the insurance sector. So you have capital markets, banking, and insurance regulators coming together to form the ASEAN Taxonomy Board to develop the ASEAN taxonomy. And this was done under the auspices of the ASEAN central bank governors and ASEAN finance ministers and central bank governors. And at their meeting in March 2021, they endorsed the establishment of the ATB. And I think we got cracking straight away after the ATB was established, and it was felt that in developing a common taxonomy for ASEAN, we would adhere to five principles of the development. The first is that the ASEAN taxonomy will be the overarching guide for all ASEAN member states that could provide a common language and complement each member state's respective sustainability initiatives. The second principle is that the ASEAN taxonomy will take into account other widely used taxonomies or established taxonomies, the EU taxonomy for one, and other relevant taxonomies where it is appropriate. So these will be contextualized to facilitate an orderly transition to a sustainable ASEAN. The third is, I think, what Nickolas alluded to just now, the principle of inclusivity. We want this to be inclusive, and of course, there are 10 member countries of ASEAN at different stages of development, and we will strive to have a taxonomy that can be used and accepted by all the member states and beneficial to them as well. At the same time, it goes without saying that the taxonomy must be credible, science-based where appropriate, and it has definitions as to what comprises sustainable activities. And last but not least, the taxonomy will be aligned with the sustainability initiatives taken by the capital market, banking, and insurance sectors in ASEAN, or at least not be in conflict. One thing unique about the ASEAN taxonomy is because we do want to incorporate these five principles. A notable aspect of the taxonomy is that it is perhaps the first taxonomy which employs a multi-tiered framework that is developed in stages, and it was felt that the common taxonomy is crucial to drive the region's sustainability agenda as well, and because of these the different stages of development of the ASEAN member states, the diversity of the membership must be taken into account. Hence, the multi-tiered framework that we adopted for the taxonomy. And in addition to that as well, it's notable that the ASEAN taxonomy is perhaps only the second regional or block taxonomy involving more than one country after the EU taxonomy. of course, in ASEAN, the association of the member states of the Southeast Asia, in fact, it does not have any legal backing, such as the European Commission and in the EU. So the taxonomy is a guide, and it is something which members would seek to adopt for their own countries and for their constituents. So perhaps just at this stage, just a brief mention of how the taxonomy is designed to reflect that multi-tiered nature. So it does have tiers building on common principles as a foundation. I think what's interesting to note is that the ASEAN taxonomy has 4 environmental objectives and 2 essential criteria, which is aligned or very similar to the EU taxonomy, hence facilitating interoperability between taxonomies and reducing fragmentation. And it has, in this tiered framework, it has 2 broad parts. One is a foundation framework, where the assessment of eligibility is done on a qualitative basis. But we also have the plus standard, where there's additional guidance and scope is given to member countries to further qualify and benchmark green activities and investments. And it is under the plus standards where metrics and thresholds come into play. So perhaps at this stage, I will just stop here for this intervention and hand it back to Nickolas. Thank you.
Khairul, thank you very much. You've triggered a number of further questions, which I come back to. We've got a very live audience this morning and afternoon, evening, depending where we are, which is very nice and exactly the purpose. It makes my life incredibly easy. But anyway, Jaclyn, before we come to that, I think, as a big global bank with a particular, focus on Asia, how do you view this work on taxonomies? How are you looking at things like international consistency? But also, we've talked a little bit already about transition. How do you see the taxonomy contributing to the question of transition, and not just in defining a nomenclature of what I sometimes call super green, things that are obviously environmentally or from a climate change perspective, positive and beneficial?
Thank you, Nickolas. I almost didn't put myself off mute again, and that would have been a really big faux pas, given we've been doing this virtually for over 2 years now. Firstly, I'd like to echo Khairul's point. It's fantastic to be here this afternoon or this morning for others, and a very important topic to discuss. I think Raffaella and Khairul have already touched on many of those points and the need for consistency and some of the challenges that we have across the markets that we're in. From a Standard Chartered perspective, in 2020, our board and management team at the bank reviewed our sustainability strategy and agreed to accelerate the level of investment and roadmap to support our vision to be the most sustainable and responsible bank. We made a commitment in October 2021 to be net zero in our own operations by 2030 and within our financed emissions by 2050. We published a white paper on our methodology, and we also committed to pledge 300 billion with the financing towards green and transition projects. I did see a question pop up in the Q&A, particularly around gas and nuclear, and I'm sure we'll come into more of a discussion on that. Along with our pledges, we also drafted our own transition taxonomy in how we would categorize certain financings to whether they would be eligible or not. And we aligned this transition taxonomy to the IEA net zero pathways. gas obviously is something we're still looking at, and I think better clarity, as Raffaella had mentioned, better clarity on a transition framework and what that includes is needed. Primarily, I think action is needed internally and externally in order to bridge ambition and reality. As I mentioned, at Standard Chartered, we're aspiring to be the world's most sustainable and responsible bank, and that requires us to take action quickly internally, but also relies on external support to ensure that there is that level of consistency, both for our clients, investors, ourselves, and the communities we're in. The latest IPCC report showed urgency of all this work needing to be done. In the last decade, droughts, floods, storms have killed 15 times as many people in highly vulnerable countries versus the wealthier countries. In 2019, 13 million people in Asia and Africa were displaced due to extreme weather events. And I think it should be recognized that for emerging markets, they're all on different transition pathways. So trying to get consistency from all of this is the challenge. The social and economic factors all need to be considered as part of these frameworks. At Standard Chartered, all of this is at the heart of the business that we're doing. Even though we're a British bank, 90% of our business is in Asia, Africa, and the Middle East. And crucially, our footprint covers some of these markets and sectors that are most impacted by environmental and social pressures. So we hope to play a key role in catalyzing that sustainable finance where it really matters most. Everybody, I'm sure on this call will be familiar with the 3.5 trillion investment that's required per year to 2050 in order to get us to the goals that we're wanting to achieve. So Asia Pacific accounted for around over 52% of global CO2 emissions in 2020, and there's absolutely a need for us to have consistency in breaking that down. We all know that the private sector cross-border flows will be needed to close that financial gap, and consistent policies, especially around taxonomy frameworks, can play an important role in facilitating those flows. So to ensure that the capital and financing are available at the most affordable costs, this is something that both investors and financiers will want the ability to look across geographies and portfolios when investing and lending into green or transition activities. Again, there was another question that popped up whilst Khairul was speaking earlier around what should be the ask of policymakers and regulators. And from the banking perspective, regulators should continue to carry out an assessment on what standards could apply to emerging market countries and develop a transition and taxonomy accordingly. As Raffaella mentioned, this work is already underway. Transition finance will be critical to the decarbonisation of the emerging market economies. And it's therefore critical to define transition pathways based on scientific metrics and attributes. And for this pathway, it needs to be compatible with all the environmental objectives. Similarly, policymakers have now widely recognized the need for consistent taxonomies, as demonstrated by efforts ongoing, such as the Common Ground taxonomy, which both Raffaella and Khairul have mentioned, and all the work that's been carried out by the International Platform for Sustainable Finance, as well as, Khairul, as you mentioned, the need to have some level of consistency across the ASEAN Taxonomy Board. I think it's fair to say that a lot of these efforts are still very much at the early stages, and both the public and private sector need to continue collaborating closely to develop compatible and interoperable taxonomies. And I think we'll touch on that a little more. Hopefully, it's not really around the harmonization, but more the interoperability of all of these taxonomies across all of these markets. I think the importance is that these taxonomies be consistent enough to support the cross-border flows, as well as account for the variety of context, especially for emerging markets. because those markets are the ones where transition is absolutely needed. And not only the environmental perspective, but also the social impact within those markets and communities. So the commonality and consistency will ensure that there is better effectiveness across those markets that are more impacted.
Very much indeed, Jaclyn, for these thoughts. And I'm scribbling away because you link a lot of points, and again, you've taken one to questions. So it's interesting how this is evolving, this discussion. We come back to issues of, emerging markets and transition paths and how to deal with that, to interoperability. I found it very interesting that Khairul mentioned that you're looking at, integrating or recognizing certain other taxonomies or elements of other taxonomies. I want to come back to that. But I think importantly, Julia, coming to the question also of usability, I mean, how you've been looking at how to integrate different taxonomies into data frameworks to make this, to take it to another level, to take all this, to make it workable for the industry. And not just, as I say, in a specific jurisdiction, but also in a cross-border context. It'd be interesting to hear a little bit the way you're going about that, what some of those elements are.
Yes, thank you very much, Nick. So I'm very happy to be here this morning. Thanks for inviting me. So I am, yes, really here to give you a very practical, down-to-earth perspective on how we provide large data banks to investors on regulatory data sets, of course, regulatory settings, of course, but very much in particular on taxonomies, and even more in particular on the EU taxonomy, which is the taxonomy that is existent for now and that we have developed a specific data set on. So I represent, just for everyone's information, I represent Moody's ESG Solutions, which is not the credit rating agency, but which is the ESG data provider within Moody's Corporation. So we have developed a data set covering 10,000 companies on the EU taxonomy. And I just wanted to give you a little bit of perspective on how we go about to provide data to investors on these 10,000 companies, because it's really actually a pretty complex thing to do. So, and in particular, we've had a lot of fun over the last 2 years or so, because investors, as soon as the EU taxonomy was announced and sort of high-level information given, investors actually came to us and obviously to other ESG data providers to ask for help and guidance on how to prepare for aligning with the EU taxonomy. So yeah, we've had a lot of fun over the last 2 years. So actually, just to very shortly tell you how we do this. So first step, of course, so several steps in our analysis, but first of all, we have to identify the company's economic activities very much in detail, because you know how granular the EU taxonomy is. And then we analyze these activities to see if they really make that substantial contribution to climate change mitigation and adaptation for now. So we follow the technical screening criteria as much as we can, because, well, for mitigation is actually very straightforward, because it's quantitative criteria, and we just need to, verify the alignment to these quantitative criteria. For adaptation, we have actually built a specific framework using our ESG assessment methodology and more specific data for those activities where the delegated act does not provide specific distinct criteria. So we use our internal data specifically on how companies align or how companies tackle physical climate risks and the implementation of adaptation solutions. So that's one first point that I wanted to highlight, that we really use also our internal existing databases to screen and to allow for a holistic screening of those 10,000 companies. Then in a second step, we carry out the do no significant harm analysis. So once again, there are very detailed criteria provided in the Delegated Act for both climate change mitigation and adaptation. But once again, we also use our internal database, and namely our controversy risk assessment for the 4 environmental objectives: water, circular economy, pollution prevention, and biodiversity, where the criteria provided by the Delegated Act is not as detailed and granular. So that's the second step. And the third step, of course, is to screen the social criteria, so the minimum social safeguards, where once again we use our controversy risk assessment, but also we also analyze how companies respond to controversies that arise, scandals, accidents, and so on, to verify if the social criteria are respected. So, and at the end of the day, obviously, we at the end of the not the day, but the analysis, we provide the overall alignment information to investors in terms of percentage of revenues. The CapEx and OpEx data is not yet available. So that's very, in a nutshell, very short summary. I wanted to just highlight, some of the challenges that we've been seeing through our analysis. And I mean, and that's I think going to be very important for future taxonomies as they come out in other jurisdictions over time. So, I mean, the most important, and first of all, the regulation was still under construction, of course, so that was not always difficult. We had to start developing our methodologies before the criteria had been published, and then before actually companies started reporting, which is only now the case, and only now only in Europe, and we're not seeing such kind of reporting very much in other countries. So the lack of company reporting is really very much a problem for us, where we have to find proxies, where we have to find estimations, or where we need to use other databases. So I think, well, I mean, I think we'll come back to the discussion a bit later, but this is, one of the important aspects, lack of reported data. So in Europe, the regulator or the regulators are really pushing to more corporate disclosure, and we will definitely also need to see such regulatory pushes in other countries to help carry out this very complex and granular analysis of how companies in the real world align with the taxonomy. So I would say I'd leave it at this for now, but obviously I'll come back to some of the more practical issues in the discussion.
Thank you very much indeed, Julia. I think I would like to come back to Khairul and then also to Raffaella, and build in a number of questions that have come in into this. And I see how I do this because I've been a lot. But I think maybe, and I see more questions are coming in. I think, actually, Khairul, let me start with you. So looking at this point of flexibility and specificities between the different jurisdictions, how are you dealing with this in a practical way? Is it that you use the same taxonomy, but you amend the screening criteria? Or how do you kind of build in that flexibility in into the taxonomy while still maintaining comparability?
Yeah, thank you, Nickolas. I think that's a very good point. I think if I may, I would like to share a diagram to illustrate this. Okay, I hope everyone sees the full screen. So this, I think, to your question, Nickolas, flexibility. What I mentioned earlier was broadly we have these two sections of the taxonomy, the foundation framework, which has a qualitative based criteria. So for the foundation framework, we envisage most countries to be able to adopt these, and I think there is that in terms of determining eligibility, that it's because it's qualitative, there is some more flexibility there. Then there is the plus standard, where metrics and thresholds come into the screening criteria, and both of these rely on the environmental objectives and the essential criteria that you see on your left there. And for ASEAN, I think colleagues mentioned about the hundreds of sectors in the EU taxonomy, but for ASEAN, we have decided to start with the sectors that you see on screen. There are 6 sectors, and how we decided on it was we use the ISIC system, the ISIC revision 4, which all of the ASEAN countries adopt one form or another of the ISIC revision 4 in their classification systems, and based on data on greenhouse gas emissions and gross value added, we decided on these 6 sectors that you see there. So and of course there are enabling sectors as well for those information technology, carbon, CCUS, you see on your right, and for under the plus standard for these for each of these sectors, there is a multi-tiered framework, in terms of flexibility and allowing for inclusion, which is best represented by this graphic here. So we call it a stacked approach in developing the activity level thresholds. For this approach, the reason for this is the taxonomy board takes into account the diversity of ASEAN countries, also the importance of ambition collectively under ASEAN, and also the need to incentivize transition. So under the stacked approach, that means for each activity there are multiple decarbonization pathways, and so there could be more than one threshold that could be referenced at a single point in time. So the main motivation to having this multiple threshold mechanism is to cater for different starting points of entities across ASEAN undertaking one particular activity. For under this system, it could allow for higher emissions under the lower tiers for a limited period, while incentivizing progression to the higher tiers, the more ambitious tiers. So this is illustrated, a 3-tier framework is illustrated in the diagram at the bottom of the screen. So if you see tier 3 and tier 2 there, they are the less stringent tiers. 2, of course, is the intermediate level, but the thresholds for each of these would also be determined by agreed metrics, and they would go beyond business as usual, but they are static. So we are looking to retire these thresholds at a certain point in time in the future to encourage movement up the ladder, so to speak, to the most ambitious threshold, of tier 1, as you see there. So this, we foresee this to be aligned with net zero or Paris Agreement goals. This threshold, unlike the other two, is dynamic, which is I think illustrated by the slope that you see there, and is foreseen to decline over time to zero. So in a way, when you talk about interoperability and comparison against other taxonomies as well, we foresee the advanced tier to be somewhat similar to other existing taxonomies. But I think, as I mentioned before, there is a need to recognize that because of the different levels of development within ASEAN, having the multi-tiered concept would encourage action now rather than delaying any action due to the inability to meet a very ambitious threshold. So this encourages, we feel, action, immediate action on the part of ASEAN member states to start their sustainability and transition journey. So perhaps, Nickolas, I'll just stop there, and I'll stop sharing the screen as well.
Thank you very much. No, that was very interesting. And there are two questions to you and Raffaella. One from Tomo Ishikawa, which is, to what extent do you think should there be or could there be principles or role for the G20 in developing high-level principles in managing alignments of taxonomy or convergence of taxonomies? And the other one, which I think is interesting and maybe plays a bit more to the points that you've just made, is the role of the common base taxonomy that's been developed and is being developed and rolled out by the international platform, as mentioned by Raffaella. How can that fit into this assessment of convergence or international consistency? Maybe Khairul, start with you, and then I pass over to Raffaella.
Okay, thanks, Nickolas. Perhaps I can start by answering the first question. Sorry, the second question that you mentioned on the work of the IPSF. I think as Raffaella mentioned earlier, Malaysia is one of the members of the IPSF together with other ASEAN jurisdictions as well. But I think the work done through the IPSF in developing the common ground taxonomy between the EU and the China standards, I think is a good model, to actually find some kind of commonality rather than, I suppose, rather than harmonization. The element or the process of finding the common features, I think, is perhaps a more digestible or an easier way to begin the conversation and work to find similarities between taxonomies. So I suppose IPSF work presently, because the membership is jurisdiction based, and not all ASEAN countries are a member of the IPSF. So, but the idea itself of having the common ground features, I think, is a good one, and that starts the conversation. So even within ASEAN, the member countries of ASEAN, and so we talked about commonalities or convergence between other taxonomies, but even within ASEAN, as you may know, individual ASEAN countries are developing their own taxonomies as well. The Malaysian Central Bank, a couple of years ago, more recently, the Indonesia's OJK came up with the green taxonomy. Also, the Securities Commission Malaysia issued a consultation paper on an SRI taxonomy. So, the development of these taxonomies, of course, they are aligned with the ASEAN taxonomy, and as I mentioned earlier, it is the ASEAN taxonomy is the overarching guide, and in fact, countries that do not wish to come up with their own taxonomy, can adopt the ASEAN taxonomy as their own. But I think the ATB also wanted to acknowledge that individual ASEAN countries may want to have their own national taxonomies for to serve a certain national agenda as well. But I think in terms of fragmentation, the issue of the ASEAN taxonomy being the overarching guide, and what we see that the taxonomies that come out so far have largely been aligned with the ASEAN taxonomy, actually addresses that issue. There is some form of harmonization and what do you call it? Harmonization there as well. So perhaps I pass the mic back to you, Nickolas.
Thank you very much. Raffaella, maybe to you, we'll get even more questions on this. Also the question of which international fora might be best placed to help towards convergence other than the International Forum. And also a few questions have come in. What can the industry do to contribute towards convergence in the applicability of taxonomies?
Thank you very much, Nickolas. I will start by echoing a bit what Khairul said about the common ground taxonomy and the importance of it to bring a bit of consistency in the approaches and to ensure interoperability. As also Jaclyn mentioned, the interoperability is the key word, clearly for taxonomy and for alignment of approaches. Now, what's the interest of the common ground taxonomy? The interest is that it shows that different jurisdictions with large capital markets may pursue the same objectives. And then even if the taxonomies are not identical, to the extent we manage to find commonalities, we can build on it to make them comparable and to ensure interoperability, which of course has to be worked out. So it doesn't come from the comparison exercise, but this is an important step to understand what are the differences and the commonalities based on a methodology. So the beauty, I will say, of the common ground taxonomy is to set out a methodology that can be used for this comparison, and we welcome very much that the interest that our other IPSF members showed in joining this exercise. Now, if I rightly remember, the second question was about the G20 work on transition finance, where, of course, the principles for transition finance are broader than taxonomy. It's not only about embedding transition in the taxonomy, it is also about transition paths. I mean, it was mentioned, I think, that by Jaclyn, the company transition efforts as integrated in their transition plans and both incorporating governance and disclosure rules. So is about disclosure of transition plans, is about sustainable corporate governance rules, is about setting transition targets and transition risk management. And it also concerns the portfolio level, where the instruments can be developed to accompany the transition. So we are talking about transition finance tools. In that area, we believe that the taxonomy can play a role. Principles are broader, but the taxonomy can play a role, for instance, by supporting target settings, by helping designing credible green financial products. In terms of how much the high-level principle can achieve consistency, of course, these are high-level principles. Then it will be important to work and to pursue the cooperation at the international level to come to achieve a certain consistency in the approach, while taking into account the differences, because this was about the theme today. There are regional differences, there are different starting points, and as it was mentioned already, I think by both Jaclyn and Khairul, the idea is not to have a perfect uniformity, which is probably impossible, but a certain level of comparability, which ensures that these instruments are interoperable, although they allow for more ambitious approaches. Then I'm not sure what were the other questions for other fora.
Yeah, no, there's two more questions. One was, what could the industry do to further support convergence of taxonomies? AFISMA is working on that, looking at different taxonomies. And Matthew of AFISMA asked, what in concrete terms could the industry do to contribute to this whole work of convergence? And the other one I come to maybe afterwards, because that's really more specific about the work at the European level. But first, what could the industry do?
That's a very good question. And I mean, I think that the role of the industry is crucial in the transition towards a more sustainable economy. Of course, the transition pledges of the industry are very much welcome, and we need to make sure that they are credible and they are properly verified. There is an important role for the data availability that the industry can play, because all the disclosure framework is based on credible data, and I think this is one of the main contribution. Then, of course, the dialogue with the industry is important. I think that when we talk about this notion of interoperability, what the industry can help doing is to identify what are the key elements that needs to be taken into account when working towards interoperable frameworks.
Yeah, and I think that's kind of where AFISMA is planning to go. So I think that's very, very helpful indeed. I think one European question, Raffaella, it won't surprise you. We expect the platform, in this case, not the international platform, but the European platform, Sustainable Finance, to come out with some recommendations today around do no significant harm and harmful activities. There's also been this discussion whether or not Europe should move forward with the second taxonomy, specifically focused on transition issues. Maybe, I know this is not your core area, more Martin Spolz's area, but maybe you can say a few words on those.
Yeah, thank you, Nickolas. Indeed, I mean, I'm not an hard transition taxonomy expert, and as you know, there is our complementary delegated act still under scrutiny by the co-legislator. What I can say at that stage is that the European Union will take, well, the European Commission will take into account, will look at the recommendation of the platform, and then will make his decision, will consider it, but nothing has been decided yet. I think that this is all we can say.
Thank you. Maybe now to Jaclyn and Julia, I think also the question, what role can the industry play or should play to contribute towards convergence? And one specific question, Jaclyn, that came in for you, which was also triggered by something that Raffaella said, is how do you police, how do you manage the commitment that individual banks, financial institutions have made as part of the Net Zero Coalition for actually meeting those targets by 2050? But basically, how do you plan your risk management in a way to get to these targets?
Thank you, Nickolas. Again, it comes down to having clear taxonomies and a set of approaches and principles that are science-based. So internally within Standard Chartered, we have our green and sustainable product framework. We also have the transition taxonomy, which I referred to earlier, and being able to assess from a risk perspective whether any activities align with those. We're also looking at ensuring that we can build, Julia touched on this earlier, but a framework or a data architecture internally that captures all the relevant ESG data relating to our clients and informs the decisions both from a climate risk perspective, but from a credit risk perspective when making those decisions to where we allocate capital that is both a green or transition related. So again, it goes back to ensuring we have, and I think a question was on the Q&A board as well in relation to usability and interoperability. And these two characteristics are ultimately what define a successful taxonomy being implemented, and they should complement each other. So designing an overall taxonomy should similarly follow a core set of common principles. They should be flexible to take into account both local context at a technical level, and also being having the ability for those taxonomies to be compatible and talk to each other across other jurisdictions. I think taxonomy should also set out clear environmental objectives and safeguards right up front. And when we have those common approach and principles, policymakers and regulators can collaborate on specific technical thresholds and metrics at a level compatible with the local context. Then this then touches on the point of the sort of usability piece. So usability, being able to practically use it at a local level, and then the sort of interoperability, quite simply investors and lenders being able to know that a particular asset is green under certain jurisdictions. So whether it meets taxonomy 1, 2, and 3, or whether it meets taxonomy 1 and 2. And we're looking at that internally on how to use data to sort of assess and make those decisions. It does require a level of algorithm to be internally, because as we've touched on, all of this is relatively nascent, and the metrics and methodologies are continually moving, and the taxonomies in all our markets, of which there are 60, are at varying levels of maturity, EU, as we've discussed, being the most mature. But how we then build in a very large organization that is complex across so many markets, being able to not necessarily offset but match and compare the various requirements and frameworks across those markets. But today, quite specifically to answer that question on how we do it, is really about integrating it into our credit processes, being able to develop a framework that gives us guidance so that we can credibly say we're mitigating any greenwashing risk, and as these taxonomies externally evolve, so we can adopt them internally.
Can I ask one follow-up question before I come to Julia? And that is, Julia raised already the question, and I know you come to it in more detail, the question of practicability, the actual availability of data. How do you see it on the user side? Because as you say, you rely on data, you rely on the need of algorithms, but what's your experience with the availability of data? So how close are we to actually converting that into practical decision making?
I would say we're right at the beginning of the journey, and Julia can probably speak more closely to this, but in some of our markets, the availability of data is almost non-existent. Some sectors today are very further down the maturity on being able to provide the relevant data needed. But how we at Standard Chartered are providing that sort of education and dialogue with our clients across all our markets is, again, by setting the frameworks internally. We have an ESG advisory capability within the business to talk to our clients around both their ESG and their transition strategy. Today, similarly to as Julia outlined today, where there is a gap in data, we are using proxies. And again, this informed a lot of the methodology that we set out in our net zero paper last year, our methodology paper, and we continue to work internally. There are a number of external providers that are, again, the provision of this data, the transparency is evolving. That will be dynamic. It will continue to evolve. And for us, I think building a framework that's flexible enough to adapt that, and by sourcing the data, assurance checking that data internally helps inform our decisions. But I think quite fundamentally, we're very far behind at the moment, and we need to accelerate that in order to make informed decisions, both from within the bank, but also our investors and so forth, when they're looking to finance these green and transition projects.
Thank you. In the light of that, Julia, we're at the beginning of a journey. So how do you see this? I think two questions. One is, do you see any difference when it comes to questions of data and technology, adaptation and adoption of technology between Asia and the EU? Singapore, for example, has been kind of spearheading a lot of those initiatives. Do you see any changes there? Is that a universal problem? Have you seen some best practices somewhere? And the second one that came in from Michael from Euroclear, which is a very good one. Given we've got a number of external providers, what is the need for standardization in the industry? Standardization both in how you do things, but also standardization around the data itself. Thank you.
Yes, thanks for those questions. So I just wanted to briefly come back to and that will answer your first question at the same time, to what industry can do. And that's really, from our perspective, disclose, right? We need more corporate disclosure. And I wanted to highlight one of the areas in which corporate disclosure is really lagging behind, because on all the ESG aspects, emissions data and gender equality data, diversity data, and so on, we're seeing improvements everywhere. Europe is obviously, with all the different regulations that are making corporate disclosure mandatory, Europe is still very much advanced, but we are seeing a lot of progress also in different Asian countries, also in the Americas, specifically the US and obviously Canada. So ESG disclosure is improving. We're still very far and there are a lot of interesting initiatives, among which the FOSDA, I don't know if everybody knows, but please do look into what they're doing. Interesting initiatives on how to fill the gaps and holes. But what very specifically talking about taxonomies is needed from companies is disclosure of economic data. And that is because, you know, we have to find out how much in terms of revenue percentage is actually coming from a specific economic activity, and that on a very granular level. So and that is really something where we see, especially as regulators start asking us, or even clients, they want to see real data and not estimates, right? So we can develop models and estimation methodologies, etc. But if it comes to real data, there is definitely a gap there, and it's problematic for companies, I understand, because these are sometimes or often confidential information that companies are not necessarily willing to disclose. But we must somehow get there if we want to achieve that big mission of, you know, pushing investments into a more sustainable way. Another aspect that I just wanted to highlight is that, of course, corporate disclosure is important, but then that is not going to help us on everything, and especially, you know, when it comes to social questions. If when we want to actually find out what's going on, if a company is really compliant with its own objectives and goals, so I think the investment industry needs this verification of controversies, of what's really happening on the ground, and we need external views, not only company views. We need NGO views, we need media reports, and so on. So that's an important issue to raise as well when we talk about corporate disclosure. So coming to the question of standardization, I mean, it is, from our perspective, a very good direction to standardize and not to have 159 or 69 different taxonomies all across the globe. Then it, you know, the whole data collection and verification issue is going to become just too complex. Even for one taxonomy is already very complex, but that, I mean, it's good to go into the direction of standardization, because it's that at the end of the day a more or less simple mapping exercise. But the question, as I read it from the audience, was also about ESG ratings and ESG assessment. So there, our point of view is a bit nuanced. We're not so much in favor, and I think I am not only speaking for Moody's ESG solutions, but for the whole market of ESG data providers, is that we do need flexibility in the methodologies, and I'm probably also speaking for a variety of investors out there that want to choose among the diversity of different approaches to how do we analyze ESG performance of companies. You know, there are different approaches: financial materiality-based approaches, impact-based approaches, double materiality-based approaches. So investors really want to choose from that, and also to compare different providers' methodologies as to how they actually, what kinds of opinions are given on you know, different policies, ESG sustainability policies of companies. So standardization, okay, for regulations, for labels, for norms, for standards, but for ESG ratings and assessments, let us keep the diversity in the market.
Thank you. A very good answer. I'm very conscious of time. We've overrun we could talk for ages on this, and we were discussing whether an hour and 15 minutes was too long. It was certainly too short. I really want to finish on one technical question to Khairul, very, very short, I think it's more a yes or no answer, which is, in Malaysia, will the ASEAN taxonomy replace the CCPT, or will they be applied jointly?
Thank you, Nickolas. Yeah, no, it will not. The ASEAN taxonomy will not replace the CCPT. I think, as I mentioned earlier, I think the policy for the development of ASEAN taxonomy is that we will allow, national taxonomies to exist. But of course, I think the same people who are developing these national taxonomies are also, working on the ASEAN taxonomy. So, we believe that the ASEAN taxonomy will be the overarching guide. So there will be, there will be commonalities within ASEAN, but of course, wanting to acknowledge that member countries may have, I think, their own reasons, their own agendas that could be reflected in their own national taxonomy. So no, that was the long answer, but the short answer is no. The ASEAN taxonomy will not replace the CCPT.
Thank you very much indeed. And I think I take this as an opportunity to thank the entire panel, Raffaella, Julia, Jaclyn, and Khairul, for a very, very fascinating tour de table on these issues. And I know we will come back to them, I think, in the forum next year again, I have no doubt. Thank you very much to you.